The CFO and CEO of Blue Dart joins in now on the show. Mr. Dhingra, good morning. The revenue growth was a little under 8%. It was rather weak. Can you explain what the pressure pockets were and what was the volume growth this time around?
I think, if one has to look at what happened to the Indian economy last year. Everybody knows in November we have the rupee demonetization impact. So that had, continuity of the same till about, I would say, April of this year. Now we see the trends that yes, the impact is almost over. It was not only on B2C, it had an impact on the other B2B business as well. So I think, one should not really look at one quarter number as such. One need to really see more like the annual numbers and how you have been continuing for years. So I think we as a company don't really look at one particular quarter as an indication. It's performance is not it has to be more sustainable. So one need to really see on annualized basis, historical trends, how you are progressing. Those things are more important.
Mr. Dhingra, good morning. So in that case, let's discuss the full year. What can we expect in FY18?
Well, if you look at our historical trends for the last 5 years, average CAGR will be in double digit. So I guess similar kind of trends would continue going forward. So we believe that good part of, growth is yet to come, and especially post GST, and that's going to be really a positive step for the express companies like Blue Dart. So we are very positive, going forward.
That's going forward, sir, but have you lost market share in the year that just ended?
No. I think we have been gaining our market share. There is no issue at all. It's the overall economy which is, so it's not that, we have lost share anywhere. In fact, we have gained.
So for the benefit of our viewers, what proportion of your revenues comes from B2C and B2B segment, and what's the realization from each segment?
You see, in terms of our revenue mix between B2C e-com and B2B, B2C e-com is close to about 23-24%, and rest is B2B. In terms of realization, in terms of the contribution to our bottom line, well, both the products are equally profitable. Certainly, B2C e-com has an additional element on cash on delivery, which then is an additional kind of an activity which is performed while delivering the product. Certainly then that is an additional contribution to the bottom line. But by and large, if one has to look at from a freight perspective, what is our charge, it's more or less same for both the businesses.
Mr. Dhingra, why are your margins so low, both for the quarter and for the year? Was there a one-off, and what can we expect in FY18?
Yes, now if you read our notes which we had given for our press release when we had declared our financial results, we had mentioned that during the 16-17 we had hired one of the biggest consulting firm to do some more of strategic initiatives for us. That is one-off, so I don't think that's going to continue every year. So if one needs to add that back and then look at, because there were this year Government of India also had a lot of increases on the diesel and petrol. So if one has to add all these elements back and the rupee demonetization impact in terms of revenue drop, well, all this actually will then bring the margin back to close to about 11%, which was there in 15-16. So we feel that yes, it's an one-off kind of an year, and we are not very worried that going forward there would be no improvement on margin. Margins will come back to those levels which we have enjoyed over the last 5 years.
So can we expect 11 to 12% margins in the FI in the current year?
Well, you see, it will not be prudent for us to say that, but yes, certainly it is. If one has to analyze our last 6-7 years, you will see the average margin what has been achieved will be there. Now, whether it is 11 or 10, range would be something like that.
Okay, so what will the revenue profile of the company look like in the next 5 years? What are the targets?
Well, we can't share those numbers, but certainly we as a, prudent organization keep our 5-year plans always in place.
Okay, Mr. Dhingra, thanks a lot for your time today.